Put on your seatbelt, folks. As we approach the spring selling season, what is happening in the Temecula Murrieta Valley housing market? I'll give you the latest stats and info, and I am a little bit squeamish about it. Hi, Jessica here with the Genung team in Active Realty. We are going to get right to it today. We may have hit the bottom in the latest market data. Days on market are plummeting and listing inventory is way down. And it's not just in my business or our local Temecula Valley. The housing market seems to be ramping up nationally, but even more so in our area. The Temecula Valley was early to adjust when the market started to slow last year, and it makes sense that we will be one of the first to see a bounce. Let's look at some data provided by Redfin in this article, and I will let you know how it compares to our market because real estate is very local. Here's the title of the article. We'll link it down below in the description. Housing market update, early stage home buying demand hits its highest level since May. Redfin's Home Buyer Demand Index, which measures requests for tours and other buying services from our agents, jumped as prices fell for the sixth straight week and mortgage rates declined for the third week in a row. But a lack of new listings is holding back sales. So in our local market, we are seeing most of the things that were just mentioned in that part of the article. So we're seeing more activity, we're seeing more tours, we're seeing mortgage rates come down. What we are not seeing is that prices are not falling like they are nationally. They're actually back to increasing in 2 out of the 3 cities that we analyzed. Spoiler alert, Temecula increased $30,000 month over month from February to March. I also agree with the last part of the article that the lack of new listings is definitely holding back sales. As far as the activity goes, we are seeing a lot more activity at not only our own listings open houses, but the open houses that we're taking our clients to that are listed by other agents. It helps that we have had some beautiful 70-degree weather lately too. Even just scheduling showings has made it apparent more home shoppers are touring. We've been requesting times that are already booked by other tours and having to adjust our schedule accordingly, which hasn't been happening very much until lately. Here is a chart from Showing Time, which is a scheduling tour we use on our listings, and many other agents use it too. I know these different colors of blue lines are a little bit confusing, but let's start with this light blue line. This is 2020, and you can see during the COVID lockdown how showings really plummeted to the lowest level. When you go up to the middle blue color, you've got 2021. You can see that was kind of a normal seasonal amount of showings. So you've got high showing activity in the spring and into the summer, and then it dips as the year goes on. Moving on to 2022, that's going to be your darkest blue line down here on the bottom. And you can see that our showings are definitely down, and that is where the market was slowing. And then the orange is 2023. You can see in the beginning in January, we had a little bit of bump. We saw a little bit of bump in business in January coming out of December. And then it kind of slumped a little bit, and you can see that that orange line is headed up. So my concern is that it's going to be headed up like it was in 2021, or look at how crazy it went in 2020, that light blue line again. That is why I am squeamish. And that quick of a turn upward has me a little bit nervous. So time will tell. 1 month does not make a trend. We shall see what happens. The interest rates have been decreasing as well since the Fed's last meeting and banking crisis. Market sentiment seems to think the Fed is going to shift to becoming more dovish. Mortgage purchase applications increased for the 4th week in a row in Redfin's Homebuyer Demand Index, a seasonally adjusted measure of requests to tour homes, make an offer on a home, and or start a home search with a Redfin agent, jumped to its highest level since May during the week ending March 26th. That time frame the article mentions, by the way, was at the peak of our local market. The fact that mortgage purchase applications are increasing is a leading indicator, in my opinion, that will likely result in more homes going pending and ultimately more closed sales. This is kind of scary stuff to me because we still have such low inventory. So if you have a home to sell and you are concerned that the market was decreasing, the tide looks to be turning and swinging back towards a seller's market with days on market plummeting. I'll show you those stats when when we get to the slides. The other recent development that is also kind of scaring me is Cal FHA, which I normally call Cal HAFA, has a new down payment assistance program that is receiving a lot of buzz and interest. It's a 20% down payment assistance program for first-time homebuyers, which they define as not having purchased a home in the past 3 years, so it's not just actual first-time homebuyers. This program is brand new, and there are some details, of course, so if you want more info on this program, just email me at jessica@genungteam.com, and I'll put you in touch with my lender to go over the program. There is a lot of buzz about this program because it is a 20% down payment assistance program, which is much higher than your traditional Cal HAFA programs, and the household income restrictions are higher than we typically see, meaning that it might be available to more folks than typically qualify for these kinds of government down payment assistance programs. The reason that this new program kind of scares me is because there is a lot of buzz about it, so I can tell people are very interested in it. It's limited, by the way. I think there's only about $300 million in funds, but I think that this is going to stimulate buyer activity into our very, very low inventory environment. So that's what makes me nervous. Like, I'm okay with, we're up against more multiple offers right now lately, 2 to 5 offers on the average property as of late. But I don't want to end up back where we were, a year or two ago, where we're, 10 to 20 offers on every property. So that's why a stimulative policy makes me kind of nervous in our current environment. It's always a good idea to be aware of your options. When I bought my first home in Murrieta, I qualified for a first-time homebuyer tax credit that was rolled out during the Obama administration. So I received an $8,000 tax credit, so not a deduction, it was a straight credit, which was pretty awesome. Back to Redfin. New listings of homes for sale declined 22%, one of the biggest drops since the start of the pandemic. Homeowners are reluctant to sell because they don't want to give up a low mortgage rate. The lack of new listings is causing a growing share of homes to fly off the market quickly. Nearly half of homes are selling within 2 weeks, the largest share since June. This is exactly what we are seeing in our area. Wait till you see the decline in days on markets across all 3 cities we analyze. New listings, which are our buyer inventory, is plummeting. In Menifee, the number of listings are down almost 20% in just 1 month, which is not good for buyers, and it goes anti to our normal seasonal trends. That's the other thing that's a little bit confusing. Our inventory should be increasing right now, not plummeting. So interesting year. Let's look at the numbers, and as always, if you are finding this information helpful, we would love it if you would smash that like button and consider subscribing to our channel. Okay, let's start with median sales price, starting with Menifee, which is our only city that has the price decline month over month, the $8,100 price decline of 1.5%. And I do not think that is going to last when we get to a later slide of our listing inventory and the months of supply. So I think that's going to be short-lived. Year over year, prices are down in Menifee a little over $47,000 or 8%. All right, moving on to Murrieta, where we see a median sales price increase month over month from February to March. We're up a little bit over $11,000. And the price increases in Murrieta, they have been hard to come by over the past few months. So this is kind of big news. Year over year, we are still down 36,000 year over year, and that is down 5.4%. Temecula has by far the biggest sales increase at $30,000 month over month. So that is a huge gain in just 1 month. And Temecula is only down 20,000 now year over year, 2.7%. So if this Temecula increase continues at the same pace over the next month, Temecula homeowners will have gained back all of the equity that they lost over the past year. Moving on to closed sales, starting with Menifee. Menifee is flat at 140 closed sales, but they do have the most closed sales out of all of the 3 cities, but again, it's flat. Closed sales are still down in Menifee, about 75 homes or almost 35% year over year. Moving on to Murrieta, we are seeing an increase in closed sales. So Home sales are increasing by 44 homes or 53% in Murrieta, and that trend continues if we move on to Temecula. Temecula home sales are increasing as well. So Menifee flat, Murrieta increasing a lot, Temecula increasing somewhere in the middle at 22 homes or 27%. Still, all three cities are down year over year, but this month over month increase that we're seeing across Murrieta and Temecula, this is typical seasonally as we roll into the spring selling season. This is what we would expect. Okay, moving on to median days on market. This one is big news here, where we are seeing median days on market, the amount of time that it takes to sell a home, just absolutely plummet across all three cities. Menifee's has the smallest decrease at 10 days on market, but I mean, percentage-wise went from 34 days to sell a home in Menifee to 24 days. 10 days and 1 month difference is quite a large decline in the time to sell a home. Moving on to Menifee month over month. In February, it took 49 days to sell a home. In March, it took 20 days. We're down 29 days in 1 month to sell a home in Murrieta. So that is plummeting, and 20 days to sell a home on average is very quick, although not as quick if you look at the year over year numbers. A year ago in March in 2022, it was taking 7 days, which is kind of, that was in crazy time days. Lastly, Temecula also plummeting. So February, 38 days to sell a home in Temecula. March, only 16 days to sell a home. So 22 days fewer to sell a home month over month. Year over year, it's up 10 days from 6 to 16. So across all cities, all three cities that we analyze, days on market is plummeting. Moving on to number of listings, starting with Menifee. Well, across all three cities, number of listings are down. This is our inventory, which this is going against seasonality. So, but it's happening nationwide, as we talked about in that Redfin article. So inventory is decreasing. Sellers are wanting to keep their rates and not their low rates, their 3-4% interest rates, and not put their homes on the market. So month over month, we have 50 fewer listings in Menifee. Year over year, number of listings is way down as well, 39 homes year over year in Menifee. Moving on to Murrieta, we have 9 fewer listings month over month from February to March, and year over year, we have 22 fewer listings. Moving on to Temecula is fairly flat, but it's still down at three fewer listings month over month, and year over year we're slightly down also, just 9 fewer listings than March of 2020. Here is a different kind of chart to look at to put these number of listings into different perspectives. So this one is in line chart format, and we thought that this really illustrates how number of listings was going up from the beginning of last year in 2020, and it was just really peaking in all three cities mid 2022, which is where we saw the market really decrease, really slow down. Inventory started to pile up. Days on market was increasing. We were starting to be able to negotiate prices down a little bit. We're getting more buyers more easily under contract. And then you can see as we roll into the end of 2022 and the beginning of this year, we have our inventory just plummeting, our active listings. So I thought this chart was another good way to look at it. We've got one more chart to look at here through InfoSparks, which is where we get all of our data. But for our normal slides, we take the InfoSparks data and we make our own slides. So these line charts are straight from InfoSparks, where in this chart we are looking at months of supply, which means if no new homes were to come to the market, how long would it take all of the available inventory to sell? So we are plummeting again, but if we go back and we look look at, you know, the beginning of last year, where it was quite low, about to, gosh, actually I think in some cities, well, you can see it's dropping below 1 month. It was taking less than 1 month, that if no new homes were to come to the market, all of the available inventory would be sold in 1 month or less. And then it peaked to over 2.5 months, almost 3 months towards the end of 2022 of last year. And then you can see that it's just really decreasing again. So in Menifee, we've got 1.4 months of supply. Murrieta, we have 1.4 months of supply currently. And in Temecula, we have 1.5 months of supply. So that is an indication of a very strong seller's market again, all of the sudden. Whereas we were, you know, when we were getting up to, you know, towards 2 and 3 months, we were getting a little bit more balanced. Now that we're getting back into the 1 month supply, that is indicating a strong seller's market again. That's it for the stats today. I hope you found it helpful, and we will see you next week. Bye.